Last week, we covered kind of the broad conceptual framework of how we make decisions here at 10. This week, we're going to let you into a little sneak peek about how that would apply to our mythical couple, the Joneses, helping them on their path to success. So last week, we touched on what is that framework that we use here at 10 Capital, encourage our clients to help guide their process. That investing, like so many important things in life, health, wellness, wealth, takes time and is such a challenge because so many of the days when you're doing it right, when you've put in the great workout, when you've stayed the course in a challenging market, you look in the mirror and it doesn't feel like as much has changed as you would hope. It's just the reality of those very important time-sensitive activities. And one of the things then that comes in is the need to change. When do we pivot? When do we not pivot? When do we stay the course versus when is something broken? A theme, again, we touched on a couple weeks ago, a theme I wanted to bring back. And again, important because there are very specific pieces. Last week we talked again about philosophy. We talked about partners. We talked about process, and then we talked about positions and how, again, those lower foundational pieces don't change if ever. But then as we move up, you'll see a little bit more turnover. We're going to bring that into a real world application. We'll call them the Joneses. These are people that from a philosophical standpoint are nearing retirement. They want more income. They want to be able to know where their cash flow is coming from. They want to have less risk, less volatility in their life. They believe in being diversified, so we're going to work with that. They've chosen 10 Capital to be their long-term partner. We're excited about that. And now we're moving up into that process position type part of the pyramid. So what would that look like if they've fallen into one of our high income series models? One, there's going to be industry partners from about 30 plus funds, fund families, investment houses, analytic shops that in some way or another, whether it's an actual position or just a thought, are helping pour into their lives. These partners do have some turnover, but again, very rarely. Like a lot of relationships in one's life, when you find a good one, when you've taken the time to build one up, you don't want to see those move over, just like you don't want to see the partners we talked about last week move over. Asset classes. Within the typical high income series, it's going to be about 8 to 12 different asset classes or subclasses that we're going to use. You can think of them stocks, bonds, real estate. You can obviously break those down to core bond, munis, international, domestic stocks, lots of different things that we can bring to bear to again help the actual solution that we're trying to come to. Strategies, these are things like buy right, call writing, dividend rotation, market neutral, long, short, very specific things we're going to lay on top of an asset class, or not necessarily an asset class themselves, to help achieve a certain end. It could be enhance income, it could be reduce volatility, hedge against risk a little bit. These, again, still, like last week, being lower in the iceberg, since pyramid's a forbidden word in our world, not going to be changing a whole lot. These are things that are going to be more foundational, more sticky within the portfolio. Now as we move up, probably still under the waterline, the funds and the ETFs. We've got 8 to 12 asset classes. We're going to have a few more funds because we're going to use usually a couple different options within an asset class. Here's where we'll start to see some turnover. Critically though, usually driven by rebalancing. Again, we don't want to be market timers trying to be predictive. That is a fool's gold of sorts in the investment community. What we want to be is prudent rebalancers. And so the market, thankfully, is going to help drive a lot of that process. If stocks go up a lot, we're going to pick a little bit off to go maybe buy down bonds or real estate or something else that hasn't been working well. Conversely, if something else has its day in the sun and maybe stocks are weak, we're going to pick on those to help buy down our equities. But by being a disciplined rebalancer, a disciplined diversifier, the market will help guide you and help you, again, more times than not get positioned correctly. So all that being said, well, on average, it's been 2 to 3 positions that might move a year. There have been years where market's been relatively flat and it's been 0. Other years where it's been as much as 5. What strikes people when they're looking perhaps in a year where the market hasn't led to any kind of rebalancing is how much activity, how much is really going on underneath the hood. We took a sample portfolio that will remain nameless for compliance reasons and looked about 10 funds. over 10,000 individual positions represented by those 10 funds from different buildings, stocks, bonds, etc. We've shared that stat with people before. Shocks them every time. Shocks me when I look at it. The other thing that's shocking is within those funds in 2023, we had over 50% turnover of those individual positions. So again, what might have looked very static on one level of our iceberg was incredibly active on another. Adding action on top of action becomes less productive, and again is why we want to let our partners, our professionals play their role, make sure we continue to play our role for you, and again understand where things are slotting in and conceptually how much of an attitude of change versus patience we should be bringing to each and every level. This is boring perhaps, and yet so critically important, just like mapping out that great workout, taking into account what might be strengths and weaknesses of yours, things you want to work on, injuries, different pain tolerances or risk tolerances in our world. Again, whatever those apt analogies would be to construct something that you can live with, that can be successful and sustained to help get you the results that you want to get. As always, we're here to talk through this, help you find the best fit for yourself.